Hello friends and welcome back to Options to Get Rich. And today let's look at an interesting topic which all of us want to be, how to be a successful trader. Because whatever business we take, we want to be successful in that, and we very well know that trading or investment is also like a business. So to understand first how to be a successful trader, let's look at some of the mistakes which we do generally. Some of the common mistakes which I have seen primarily in the retail community is one, they don't have a trading or investing plan. Majority of them is interested in watching TVs and taking tips from some of the well-known financial advisors which appear on TV, and often it happens the moment they buy the share which is recommended on a TV channel, the share keeps on falling, and it happens very often. Okay, so having a trading plan is very crucial. You should know what you're going to invest in, what price you're going to invest in, and where you're going to take a stop loss. We will be discussing that in more detail. Let's first look at all the mistakes which we generally do. Second is we don't have a time horizon. For how many days we want to carry our trade. Suppose we enter a trade, and if trade goes against us, probably we may keep on holding that losing trade for a long time. Now, there is a catch for that. Even though you may think that you're only losing the money which you are seeing on your screen over a period of time, probably, but you're also losing the time value of money, plus the emotional strain or stress which you're going to have is enormous, because a losing trade never gives you joy. So definitely having a time horizon for your trading or investment is also important. Third, most of the traders don't have an clarity whether they want to specialize in intraday trading, or they want to do on positional, or they want to do swing trading. So it's very much important for a trader to understand through his psychology whether he wants to do intraday, it means closing the trade on the same day, or positional, probably can be 2 days, can be for weeks, or can be for months, or can be for years also. But that has to be predefined, that what is your strength, whether you can hold the trade for long, or you are a trader which looks at making the money same day and closing the trade. So that clarity is very much important, looking at your own psychology, and that you have to evaluate yourself whether you want to be an intraday or a positional player. Another important mistake which most of us do is we look at other players' MTM, which is mark to market, or their profits, and we get excited and we take trades, not analyzing the risk the financial markets bring to us. So it's very important to understand that their MTM is because of the hard work which they have put in for a long time in the markets. It's not that overnight they have started making those kinds of profit. So never go by looking at the profits of others. Don't take trades. Okay, let's move to next common mistake which we do is having no stop loss. So your trading is like a business basically. So if you go wrong, you should use your stop loss and cut your losses. Book profits, let your profit runs and cut your losses early. That's a very famous saying in the financial market, in the stock trading arena. So the moment you see that the trade has gone against you and it's as per your predefined rules, you should take a stop loss hit without any emotions. Even if it is a loss, bear the loss and get out of it, because you will have other trades to take as per your setup. But if you keep the trade running, your losses will keep on mounting up, because you don't know how long the trend may run. So it's always good to have a predefined stop loss which will save you from a bigger loss. So stop loss, can you can say, is a small amount you keep maybe 1% or 2% below your, depending on your time horizon, you keep basically stop loss so that it can save you from a bigger loss. Another key mistake which we generally see is averaging in loss. Most of the traders keep averaging their losses, which means they buy a share at say 100 rupees, it falls to 95, they add more, thinking that, oh, when it goes back to 100, my average will be 97.5 and I will be able to sell at a profit of 2.5. So they add more. It falls 90, they add more. In turn, what is happening is their losses are multiplying. Every time they are adding in a loss, their losses are multiplying. So we should do the other way around, not average in loss, but do pyramiding. So we will discuss on that also. Another key thing is for an intraday trader is they run very high on leverage, especially the option sellers. They run on very high leverage to get the premium, and sometimes when things go against them, if they don't use a stop loss, their complete capital can be wiped off. So it's very important to use the leverage properly so that even if you have a loss, if the trade goes against you, you are able to save your capital to some extent. And another key thing is, which is the most fundamental thing, is most of the people, they do trading just as a hobby or a part-time thing, and they don't have any knowledge of technical analysis. A technical analysis, basically the study of charts, helps you to determine when to buy, when to sell. That's something very critical. So you should have some knowledge of technical analysis. You should, if you are not able to give enough time, you can not become an expert, but some basic knowledge you should know. For example, where a stock is farming higher high, higher lows, there you should go for a long trade. If a stock is making lower highs, lower low, then you should go for a short trade. So based on that, you can understand a basic thing that whether you have to take a long or a short trade. This is called technical analysis. Okay, now let's quickly look at, we have seen the mistakes. Now let's look what we need to do to be a successful trader. First thing is define your trading rules. That's one of the critical thing. When you enter the trade, when you exit the trade, which is the instrument you're going to trade, because to trade there are so many things. You have financial markets, you have commodities, you have shares and stocks. So there are plenty of things to trade on. What you want to trade on, which you have to define as a trader. That's very critical. And you have to define your rules. The rules should be when you have to enter a trade, what should be the position sizing, how many shares you are going to buy, what is the stop loss you are going to keep, what is the target you are going to keep. All those things have to be predefined in your system, in your trading rule. If that is not there, then you are taking a risk, a very big risk on the capital which you are putting in the trading. Second, you should always look trading as a business. So at the end of every month or every quarter, you should analyze your profits and your losses. And if you're going into losses for quite some time, then it will be ideal for you to take a step back from trading and spend some more time on learning. Trading is pure business. If you're making profits, you can take higher investment in that, you can take more steps in that. Start with small and then scale. This will help you to build your confidence. You can spend some time in learning and then you can scale up. For example, as an option seller or as an option buyer, instead of going on leverage and taking very big steps, you can just take probably one lot or two lots and just see. whether you're going right or not, because you will find opportunities in the market every day. So you can go, if you're right, you can go and make money tomorrow also. But if you are putting all your capital at risk in the beginning without having the right knowledge, you are going to lose a lot. You are going to lose a lot. And it may kill your self confidence also to take trades at a later point of time. So it's very important that you start with small and then you scale up. Okay. Another thing is, like as I discussed in the trading rules, you should have very clear, well defined parameters whether you are an intraday, swing, positional, or a long term player. Without that, you can take wrong trades. So it's important define which is your specialty, what is your trading psychology, where you can make money, where you can hold. As per that, you define yourself as an intra or a swing player. Okay. Another important thing is always look at the larger picture. What is the larger trend, the bigger trend, whether it is up or whether it is down? In that up, in that larger trend, you should always try to take trades which are in the favor of the larger trend. Suppose a stock is moving up or an index is moving up. So whenever there is a fall, you should try to look at buying it so that you are in the direction of trend and your probability of winning is more. And definitely use a stop loss which you define in your rules. Stop loss, as I discussed in my previous slide also, stop loss will always save you from the bigger loss. Stop loss is nothing but a predefined loss which you take on your trade. Suppose you're buying a share at 100 rupees, and if the share comes to 95, you decide that okay, this is the loss I'm ready to take. At 95 I will get out of my trade. Okay, it may go to 90, it may go to 80, you will not think about that trade. It may just touch 94 and again go up also. But as per your rule, if you have defined that 95 is my stop loss, you should take a stop loss. Your emotion should not come in your trading. Emotions will basically always harm you in your business, and trading is a business. So never be emotional in trading. So take stop loss. If you're wrong, accept accept that yes, I have taken a wrong trade, and give a small fee to the market. Okay. And always look at protection of your capital. That is one of the key things, because we have limited sources of income. So whatever money we have, we should always look that we should not lose that capital, because we can always make money in trading if we have capital. But if our capital is wiped off, we are going to lose heavily. Okay. And one of the biggest thing is to be a successful trader is throughout your career, throughout your life, you have to keep learning, because without learning, all our strategies will go haywire. Over a period of time, our strategies will become outdated because technology is changing, markets are changing continuously. So we have to keep learning and keep sharpening our skills. That will only help us to be a successful trader. Okay, friends. So I will stop here and I will come back to you with something which will excite you in my next video. Thank you and have a great day.